Hello and welcome to the market update from 10th June to 14th June 2024. The first part of this video will be covering the economic update. So let's start with the global economy. The Bank of Japan kept their interest rate unchanged to 0.1%, but it plans to trim its bond buying in the next 1 to 2 years. Coming on to our neighboring country, Pakistan Central Bank cut its rates by 1.5% points to 20.5% as the inflation data showed an improvement. On the ongoing G7 summit, the G7 has agreed to give a $50 billion loan to Ukraine against the war for their war against Russia. It has decided to use the profit from the Russian Central Bank, which is kept with the European Union as a collateral, and which is about $260 billion. USFedrate and an FOMC meeting was held in the last week. Before that, they came out with the CPI inflation data, which stood at 3.3% in the month of May. So US Fed kept their key rates unchanged in the range of 5.25 to 5.5%. They gave a statement that the modest progress has been only done till now towards its long-term inflation target of 2%. FOMC members also expected just one rate cut would happen of 0.25% before the year end. India came out with a CPI inflation number. CPI inflation rate was reported at 4.75%, which was below expectation and marginally decreased from 4.83 in the previous month. Rural economy has again witnessed a higher inflation, 5.28%, which was largely affected due to the monsoon failure in the last year. The food and beverage inflation, which is still haunting the CPI number, is still in high single digit at 7.87%. Out of which the vegetables and pulses and the products were in the double-digit inflation zone. If you look at the core inflation number, which is the CPI number minus the food and beverage and the fuel prices, it has shown a downward trend, declining to a further of 3.1% in the last 6 months. The low core inflation number underscores the fact that the recent uptick in the growth momentum is largely been because of the disinflationary measures. India also came out with their IIP number. Before going to IIP number, let's look at how the Indian manufacturing PMI number and the service PMI number looked for the month of May. It was for PMI for Indian manufacturing was 57.4. Still in the expansionary mode. The service PMI was also in the expansionary mode, though marginally down from the month of April. When you look at the IIP number, the IIP did moderate to 5% from 5.4% in the previous month in the month of May. Manufacturing PMI logged a growth of 3.9%, which was helped by the healthy growth in the metals by 8.1%. Export-oriented sectors were hit majorly. The leather and the related products fell by 8.6%. The output on the consumer durable increased and the non-durable slipped to 2.4%. The infra and construction, which was backed by the government in the last year, showed a very good health. If you look at the US 10-year Treasury bond rate, it seemed to have grown to 4.2%, still large, up 4%. If we look at the oil prices, traded at $82.67 a barrel, similar levels to the last week. In the Indian market, FIIs turned positive for this week. They got equity close to 2,030 crores. DIs were also buyers. They bought 6,293 crores. When we look at the gold was trading at somewhere about 70,955 per 10 grams, which was up by 0.86%, which is a rate which the gold has become stable for last a few months. There was a meeting that was held in Singapore of precious metal conference. It was held at Singapore, and the sentiment there remained positive for the precious metal. Major reasons for those were the worsening state of major economies like China. There was a slump in local currencies, and also major currencies in the world were going into the elections this year. So that was on the economic side. Do tune in for the next video on the market size and see how the market has performed.